Oh no, we're getting more consolidation action on this monumental, historic bull run trend line that goes all the way back to the bottom of the 2008 financial crisis. So, is this part of a topping pattern on our way down to the next target, or is this the start of a new bull run? So, for this episode, I'm going to go back and compare this with a very good example of a blow off top and a 3-month credit contraction down cycle to see the basic shapes. I've zoomed in and we're going to take a look at some shapes to see what kind of shapes we might be looking for on this area of the chart. So this is going to be a much more refined look at 2018, but not too refined, because this is Brian Lewis with MMT Investing, and things just changed. So let's go back. Also, this is pretty cool here. Here, come back here and check this out. So when we come back here to 2018, and also notice 2018, we're not exactly comparing apples to apples here, because 2018 is a bull market. So in the bull market, you get this squished down version of this pattern. This is a 3-month credit contraction cycle here. It's squished down. And then when you switch to a bear market, you get what we're seeing now, which is the stretched out version of it. So let's, I guess, stretch it out a little bit, just so that it's easier to draw the shapes. And if you would like me to continue posting videos, please smash that like button right now to help me out with the YouTube algorithm. And let's take a look at some shapes and see what's going on here in our, well, apples to pears analysis from the 2018 blow off in the bull market. So we have a pretty similar consolidation top up to the blow off. And then here's the basic idea of what we're looking for. So you get a wave down, well, not like that. You get a wave down here, right? And that's your dead cat. And then you get a wave up here, and that's called the consolidating wedge reversal. And then you get your wave down here, another dead cat. Wave up here, consolidation wedge. Wave down here, dead cat. Okay, so that's the general idea of the wave shapes that we're looking for, but let's get into a much more detailed analysis of what these reversals actually look like in these market conditions. And where are we? Where are we in these market conditions? So here's our blow off and our initial drawdown, setting up the first month. And here's a run up to a peak. So this is where we are right now. If this model holds, if we're doing these conditions, which all the economic indicators say that we are in these conditions right now. So you see on the way down, we get these wide consolidation wedges and a blast like reversal, right? And this happens 3 times, right? Blast. And then wait, it didn't blast here. So let's take a look at this one later. This is a really interesting thing. I want to point out, I have a bonus surprise at the end of this episode, an idea for the turnaround point of this everything bubble crash. But here, so on the way down, we do these wide consolidation reversal things on the daily charts. And on the way up, what we do is we do our wave crossover up to a point. So the front side of the point is sharp, right? And then we get our consolidation reversal out of there, and then we cross down into the next dead cat bounce. So I looked at this chart before. I thought that was pretty much it, guys. I thought that it was going to be a really long analysis, and that was it. So thanks for watching. So, oh yeah, I wanted to point out also, this action line is where we are, and that's not it. I'm gonna go back and look at our chart. But this consolidation line, or this line right here, is our action line for today, where we're trading today in the market, is all over this 2018 peak. Like, all these reactions are on the line that we're trading on today, which is pretty cool also. So I mean, we have this 2018 bull market line and this line from the 2018 crash supporting our whole zone that we're in right now. It's super active and it's a really interesting thing. Let me get, oh no, what's happening? Get these pink things out of here. Okay, so yeah, so we get these run-ups and then a consolidated reversal. So I mean, you saw in the chart, on our chart, that we're getting consolidation now. And does that concern me? No. That's pretty normal actually. You get like a descending consolidation and then like one more try. Descending consolidation, one more try. So I'll go try to draw this on our chart in a minute, but I wanted to look at this right here, which is really cool, because I thought that this chart had a little bit weird timing, but I don't think it did. Look at this. So this drawdown sets up the cycle, and it is actually less than a month, but you get similar sized hops. I think this might be 1 or 2 days longer than the first section, and this is about the same as the first section. So it's pretty good. But look, we got our descending shape here, right? And this is this crossover pattern where you should see a reversal, especially out into, this is a switch into a monetary expansion growth pattern. So you should have seen at the end of this consolidation, or maybe like if it came to here, maybe there, but at the end of that, you should have seen your blast out there, not down here. So this looks like some incorrect panic selling after the market conditions had already switched into positive conditions. It came down, then went back to where it should have been, and then we got our shot. Then we just got our normal bull market. It's not like a crazy thing. It's just, I mean, that's just the normal credit expansion, and a bull market looks like that. But this whole thing here looks like it happened after the market conditions switched positive. Like, this was a fake panic sell-off, and then we just got on our run. So I'm going to take a look at this and where that could be on our chart, because that's not something I have even considered before. And this pattern right here just made me go, whoa. And this cycle actually is timed correctly if you end it right here. So I think this cycle, ended here. And I think this whole situation right here was incorrect panic selling rebound. Like all this stuff right here was a panic selling rebound that was already in good market conditions. So if you're looking for the super V bottom to go long at the end of this down cycle, it might not be at the target. It might be at the end of a panic sell-off after we go into good conditions. So that is a really cool thing to look out for. And I'm going to go back over here to our chart and try to draw those type of shapes on our chart and see what that kind of looks like. And yeah, you can see when you're in a bear market, that shape is stretched out. So we are in a bear market and we are going downhill in a credit contraction down cycle. And so that was, you saw in the other one that the peaks were, they were bouncing up to the top of this first dead cat bounce, those peaks. So that's a bull market, and you'll see higher highs in a bull market. And then a bear market, you'll see lower highs. So I'm still trying to figure out where to target. And I'm not really using technical analysis targets because I don't think they really work that well. But I just want to get the shape of the thing kind of and ignore kind of the technical analysis targets. So we get this wave down shape and we get this wave up shape, right? And these happen usually a little bit before halfway. So I wouldn't be surprised to see this happen up here, but I think that this is our MACD turnover. And let me just assume that we're going to turn off at this point. I'll draw it from here. So we want basically this angle again as a best guess. So like this kind of angle. And I think that was too sharp. Like here to the credit cycle line. I think that's about what we're looking for. So I'll use it right there as a target for now. And what we want is a consolidation, a little try. We want a dead cat and then a target. Boom. So that's the shape that I'm looking for right now from where we are. If this is the consolidation top, and just based on the cycle timing, I think that is the top based on the cycle consolidation timing. That's what I've been looking at as a turnover point in the last several videos, and I think that's still good. I think that we're just going to consolidate and find a next dead cat now. And I mean, this you could do something like that to, whoops, not there. Let's see, dead cat to, like, here makes sense, or down to here, it makes sense. And this was my original target, and that could still happen, but this line's a little bit steeper than that one, but that's completely within the range of things. And I just don't really expect anything to stay up here above that. I mean, I would be very surprised if we stay up here. And I don't think we can get too much lower, because I think that we're going to get a bounce here around this time zone. So, I mean, if we get a bounce around this time, how low could we possibly get? Like, I mean, like, whoa! Like, I don't think we could do that. Maybe we could. I don't think so. So, I still think this kind of dead cat and move down into this area is a good guess based on where we are. That's the idea, and I hope this was helpful. And this is not trading advice, just some models and some graphs of what might happen, and just trying to give an alternate view from what everyone else is saying, because most of the analysis that everyone else is giving is from a 10-year bull market, and you only get these credit contraction cycles very rarely. So I mean, maybe 10 or 20% of the time you're in some credit contraction cycle like this, and then 90% of the time you're in a bull market. So we're looking at a very rare set of conditions here and trying to figure out the pattern that's going on. Oh, and the bonus, I almost forgot. So I had this target down here originally. So let me just go ahead and do that target, which was, I'll just draw the picture that I had originally, which was to here, and then you'd get your next wave up, right? And then reversal, and then a dead cat, and then to here. That's what I had originally mapped out, and I'll just use that for an example. But see, like this, if the market conditions switch right here, looking at that 2018 crash, and then I had this reversal drawn out here, and I don't know if that is what's going to happen. Here's actually what I think is going to happen now after this analysis session is on this. Well, here's our first bottom target, just to review. April 22nd is my first bottom target on the cycle math, like the dates. And then May 22nd is the final bottom, where the Eurodollar world monetary contraction reverses. The end of the contraction cycle is right here, May 27, best guess, roughly. But I think, see, like when we switch into the expansion growth phase here, we're in a bear market. So an expansion growth phase in a bear market isn't going to be super exciting, guys. It's going to be like just barely positive, or even just sideways. Like, it doesn't even have to be positive. I mean, a bear market is going to drag that the normal grind that you would see up in that expansion growth phase in a bull market. Like, you're not going to get that kind of grind up in a bear market. It's going to be pretty boring, so heads up. But that dip, that panic selling dip that happened after the end of the contraction is what I'm interested in, because it could come down here and do a panic after we're in good conditions, and then you could get this run back up to boring, super boring. So this is the bonus surprise, and this is maybe the coolest spot to try to go long if we get this panic rip after we're in positive conditions. And also, if you want to switch along here, like danger, like that might not happen. This is what we saw the last time we had a good example of these market conditions. And that is what I'm looking at today. Happy trading.